Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Thursday, October 22nd. It's early this morning. It's about 6:20 as I'm starting the video. Futures are down across the board about 0.4%. For SPY and QQQ, the small caps, IWM, are basically flat. What I'm going to do this morning is go through some market internals first, then we'll run through the indexes and FANG names, and then hit a couple individual names, and then we'll wrap it up. Before we get started, I want to give a little, I don't know if it's a lesson, but an observation on trading psychology that happened to me yesterday. It might be informative to you and give you a reference point for experiences that I'm sure will be heading your way at some point if as your trading career keeps going. And what happened to me yesterday was I got right up to the edge of a tilt moment. And for those not familiar, a tilt moment, it comes from poker playing, when a player psychologically breaks and starts doing wacky things, with his bets and with his style and with, how he normally plays the game. And that can be observed by, other players at the table that knows him, personally, knows his trading style, his playing style. And also for new people at the table that, this guy's been playing a certain way all night and now all of a sudden he's doing wacky things. So anyways, let me fill you in on what happened yesterday. First of all, Tuesday night, I had a horrible night of sleep. When my alarm went off, I get up very early in the morning. When my alarm went off, I felt like I had had 20 minutes of sleep all night. So, I went through my morning routine, got the coffee going, all that stuff. It really didn't, snap me out of it. So, put together my morning note as I always do, and then, waiting for the bell. And, the bell gets going. And then, I see TAN, the solar ETF we just got, get the rug pulled right off the bat. DraftKings didn't do what I wanted it to do, so now all of a sudden I'm, getting a little mad at the price action, having just entered those positions. So I'm grumpy to start the day, and then I get grumpier, by 10 o'clock. So I say, okay, well, I'll jump into these levels. Do some intraday trading. I will, although I didn't think it actively, I'm sure there was a thought of, I'm going to make up for these losses in DraftKings and TAN by picking up some, good intraday trades. So I had a real nice one on SPY. I caught a down move and entered, right at the perfect spot and picked up 50% on that one and closed it out. And then not long afterwards, I got short entry signals on IWM and QQQ. And things were going great. I mean, price was moving my way, going lower. I was, had my eye on where I was going to close it out. And then, of course, right at that moment, Nancy Pelosi came out with some nothing headline about her talks with Mnuchin. And if you were actively trading yesterday, you saw that giant algo bar. And so like within 30 seconds, my wins became losses. Now, I got out with like 12% losses on those two positions, but the loss was much more because I was up, 50% at the time when that hit. And that was the exact same thing that I told you guys to guard against, in the days prior. Remember, those news headlines are out there waiting for you, and don't get trapped. So what did I do? I got trapped. Now my position sizes were normal. I, actively managed honored my stop. And then of course that bar completes and then it reverses and goes right back to where it was before the fake spike. So now my level of frustration is getting more. So the snowball's running down the hill, if you will. Didn't feel like myself. New positions going the wrong way. Winners turned into losers by a fake spike, and I'm right at that tilt moment. And to my credit, I recognized that and I just stopped. I just stopped for the rest of the day. No more, I was looking at entries and all this stuff, and I just said, no, I'm not doing it. It is what it is, etc. And I just more or less pulled the plug on myself, and that was it. So let's kind of recap it. As traders, simply understand that whatever's going on outside your trading room, when as soon as you open that door in the morning and sit down, all that stuff comes with you. Everything that's going on in your life sits down at the trading desk with you. You can't, this idea of leaving it outside, it's impossible. So if you didn't sleep the night before, if you got a runny nose and a cold and a headache, that sits down with you. If your mom is in the hospital with COVID or some other illness, that sits down with you. Anything that's going on comes to the table with you. And then as the day rolls forward, there's the possibility that, market events pile on top of the fact that you're not feeling your best or your mind is preoccupied. So get in touch with those emotions and those feelings. That's where journaling comes into play. What was going on at each particular time, and just understand that when you don't feel yourself, and then the market's kind of going against you, and you get in your mind that you're going to catch up, those are all recipes for bad trading. And if you recognize that, then you have a choice on how you're going to handle it. Are you going to try and fight through it and continue to trade where there's a high probability of you just kind of messing it all up because you're in revenge or catch-up mode? Or do you have the courage and discipline to just quit? And sometimes that's the best, absolute best thing that you can do, is just either walk away for an hour so you can gather yourself, or just quit for the day. And the first part of making money is not losing money. And if you get into a losing money mode, stop digging the hole. Just stop and do something else. Review charts, look for setups, go watch a movie, go mow the yard, do whatever you got to do, but push back from the trading station. So I hope that helped. Now let's get into the charts. Go through this quickly for you guys. McClellan oscillator, we had looked at this about 10 days ago. We noted that it got to overbought. We didn't take any particular action when it got to this level, because you see it can go higher, but you can also see those are often turning points, and in this case it turned on a dime. These oscillators are great at extremes, not so much here in the middle. There's nothing to see here, but if it were to come down to minus 60 or minus 90 or minus 130, then those are actionable levels. Same thing in the NASDAQ oscillator, exact same look. Overbought at 65 and now has come back with price. Extreme put and call buying. During this whole episode has been extreme call buying. You know, a lot over here. We had a little dip back into more normal back in the first part of September, but since then they've gone right back to extreme call buying, you know, from marginally extreme to very extreme. There's just been no fear, no impetus, no motivation to buy puts. And you know, this indicator here is much better at calling bottoms than calling tops. So, you know, we're going to have, I mean, as far as this indicator goes, if there's a, you know, if there's a big pullback, we want to see, you know, a spike low down here that would mark extreme put buying as a place to, you know, look for a tradable bottom if we were to ever get that. Now, the recent market action has been within the backdrop of a rising VIX the last, you know, 10 or 12 days. We had made this note the last time we looked at it, that the VIX had pulled back into here, and we said that a breakout above 27.5 opened the door to 35, which the door is open now, but you can see here that there's a resistance level at 30. And we talked about that yesterday. We didn't talk about the chart, but we talked about the VIX in relation to 30. If you see a breakout above 30, then the next target's 35. And if there were to be a breakout there, your next target's 38 and then 45. This is not a great environment for, you know, long-term holdings, you know, long positions in general. It's just telling you there's going to be a lot of volatility ahead with those, you know, plus or minus 2% days coming with more regularity. And I expect this to stay elevated in front of the election. After the election, I expect at least some vol to come out if, and that's a big if there's a clean victory by one of the two, you know, presidential candidates. If it's, you know, gets into Supreme Court and constitutional crisis and all this other stuff, you're going to see VIX hold in there. And then you might see some, you know, wild gyrations in the equity market. So watch VIX in relation to 30. If we were to get a break below this uptrend line, you know, back below 26, 25, that would bode really well for a rising equity market. Let's jump in the SPY 2-hour. I mean, yesterday was a 65-cent day, so large picture, technically speaking, nothing happened yesterday. You can see that this 346 level has capped the last couple of days. We've got a well-defined downtrend channel, and coming up on this key level at 341.50. We've talked about it, many times in recent days about what would happen if price came back down into this prior trading range, and all this becoming a questionable or false breakout, a head fake. So watch 341.50. Here's the 30-minute chart. I've dropped in like this intermediate downtrend line, but for all intents and purposes, we are in this little trading range here from 342.5 up to 346.5 on its way down, with pressure starting to build on this 341.50. Could we stay trapped in this range for another 10 days before the election? It's certainly possible, but we would just have to deal with that as it plays out day by day. The real actionable levels would be on a break below 341.50 or a breakout above this downtrend line at around 347. So those are the big locations going forward over the next few days. If there's a relief package, blah, 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 and we break out above 347, then we can look higher to 349 and above. But if things remain dicey, I think there's going to be more and more, one, volatility, but two, a higher likelihood that we go down rather than up. Here's the cues. Again, we've got a downtrend channel. Price at a relatively higher position than SPY, which is very close to the breakdown level. Here, we've got 283, 282, and then 280 as support below. Bulls want to see a breakout above 287 to get some traction. But as it stands now, we've got a lot of volatility, chop within the downtrend channel. With the, if the futures hold where they are now or drift a little lower, we're going to be testing this 283 level on the open, and then we can see, if there's a bounce or we go a little bit lower. 30-minute chart, you can see this trading range I've blocked in between 283.50 and 287.50 area. I mean, this is a $3.50 wide box. So if you're an active trader, I mean, you can make some hay in this volatility box, getting long against support, multiple opportunities to do that, and then getting short against resistance, several opportunities to do that. You didn't really get it here because it didn't make it that high, but inside this box is just pure chop. Now, if we were to break below this morning, that's going to, open up this downside to 282 and possibly 280. Again, what the bulls need to see is a break above 287 to kind of, get things going, get put in a higher high here, take out these highs at 287, break above, and then challenge these levels from below. IWM really didn't do anything yesterday. Well, it was down the most, 0.86%. Bulls need to recapture 160. Bears in control. I'm looking for a test of this gap here in the days ahead at 158.50. If that were to break there, then you've got a potential of a $2 gap move, and that would be certainly something that if you're an active trader, you would want to be on board, for that potential gap fill if you got that entry. Here's just a zoomed in look on the 30-minute chart. Obvious downtrend, losing 160 yesterday, and so now there's a clear path down to recheck this 158.50 with a break into the gap favoring a fill down to this 156.75. Facebook got the big gap higher on Snap earnings, had a great day, up 4%, actually filled this gap here in the process. So today we've got this island, a break back down below 278 is going to favor a test of this gap at 276 with a potential gap fill at least down to this uptrend line here at 270 and potentially down to this 267.50 level. So that's your downside scenario. Upside scenario is breaking out back above 282 and then on to higher ground. Now this morning, if you're bullish, you can get long against 278 and just look for a move back up to the top of the box. If it looks like, the market's going to turn bullish and get firm footing, that would certainly be helpful if you were going to take a long position right here. I don't have Facebook's earnings off the top of my head. I believe they're next week. So I think this is just a time to be, nimble, not get, all locked in, unless you're committed to, holding through earnings. That's a whole different deal. But just from a technical standpoint, got to get the break above 282 for higher, and below 278 is lower. Apple just had a nothing day. This 118 continues to be overhead resistance that has not been able to be taken out over the last several days. Lean to the short side as long as you're below 118. If you were to break above and hold it, then you can look for 120. But downtrend in place, weak indicators, I think below 118, you need to be looking towards 115 for your next support level. Tesla had earnings last night. I didn't look specifically about, all the numbers and stuff. Basically it was good, but didn't blow the roof off. I looked pre-market. It's been operating, in this 44.50 area, 445 area, excuse me. For something durable, I think it's got to recapture 450, and then there's the opportunity to come back up here towards the recent high, 460, 465. If it gets trapped here below, then you've got an objective short against 450, with a move back down to 430. And if you went below 430 again, then you've got, you know, another run down to 420 and probably 410. So it'll be interesting to see if the Tesla traders build on last night's gain or they immediately, you know, sell into it, because there'll be a gap now this morning between the opening price and this 420 level where it closed last night. Microsoft trapped in a range between 217 and 213. That's a pretty wide range. I mean, that's $4. You can make money on that intraday. And I have, not yesterday, but in the days prior, had a couple good trades fading 217. But until 213 breaks, there's no more downside. I have that level alarmed for a potential breakdown because there's a lot of room down below if it were to break. But on the upside, you know, if you were a Microsoft bull and you got a move down here to 213 that holds, that's a great place to anchor along with a stop just below. You're at support. So even if it doesn't ultimately, you know, break out and go to, you know, 220, 230 or higher, you could get a nice bounce move up to 218 for a $5 gain on a, you know, on a short-term position. And remember, all these big names start reporting next week. So keep that in mind. There may be, you know, some buying into the print. So that would be a good place to take along if you get, you know, if you get a move down here to support. Amazon, well-defined downtrend line. Really didn't do much yesterday. It was down 1%. Came up here, got rejected at the downtrend line and 3,200. So the door's open down to 3,150. If it were to drop lower than that, probably come down here to fill this gap to 3,100. So there's potentially, you know, $100 of downside here. It's been weak, obviously, very weak indicators on momentum and RSI. The downtrend line has capped these advances. So I think you can be short against 3,200, and then if you get a breakout there, then you gotta do a rethink. But until 3,200 is taken out, I think you continue to lean bearish as long as price is going in your direction. Google has reacted very positively to the, you know, the big DOJ lawsuit. Had the big impulsive move up. Now we've done some bull flag consolidation. As long as it holds 15, you know, 90-ish and moves and breaks out here, you've got a measured move up towards 1690, which would be a nice one to capture. This one has stood out as different from the other FANG names, which have all been weak. This one was stronger. Remember, we said that this was finding support at the zero line. It's done that. It's broken out on RSI. So from a technical posture standpoint, this one is much more bullish than all the other names. Now, what would give you concern is if this, you know, sells back off, loses 1567, and then, you know, comes down. But nice bull flag there. Let's see if the bulls want to continue to push it higher. Netflix had the gap down move out of earnings. Here's the new gap, 506 to 525. Price moved down after that opening bar down here to support at 490. Now today, you see the big volume over price support bar here. If you lose 490, that gives you a very nice objective short with a stop just above, and look for 475. $15 move. That would be a good one to capture. If I haven't looked at it, but if it gaps down this morning, into the mid 480s, that to me is no trade. You've got to either come back and get close to 490, or you got to wait till 475. In the middle is no man's land, and that's not a good place to take a position. Okay, moving on to a few individual names. Big C, we talked about this halfback long entry. We didn't quite make the 50% retracement, but we had identified this 91 level yesterday as potential reversal area between 91 and 89.50, and there was the reversal. So it was up, 4% in a junk day. Now, if you started trading it, move your stop up to 94, and then stay long with a target of 103. For others of you that aren't in, if it comes back for a back test of 91, that's your long entry on that back test. So that is setting up nicely. REGI, it was up really nice in the morning, then pulled back a little. Still ended up green for the day. Would have liked to seen it much higher. DraftKings going wrong way since our entry a couple of days ago. Bottom line, it's got to hold here. We're at the trend line support now. It really needs a green day, or I'm going to be inclined just to close it and then pick it up later. I don't know how much I haven't looked at it, how much we're down, but it's got to be close to 40 or 50%. We're in November calls, so we got to watch that one close. As disappointing as it would be to close it after just a few days, that's the prudent thing to do if price is not going to cooperate. TAN had the great setup and sell-off yesterday back to this support level. Again, if it goes red today, especially if it takes out this 20 EMA at 69.80, I think price would be telling us we're wrong. I mean, that's the bottom line, as disappointing as that is. I will say, and it should have been a higher level of importance in my calculation on this, is that although the setup in TAN was perfect, I mean, this is exactly what you want to see, there's a lot of names, individual names that have been awfully stretched to the upside. So this TAN is going to be reflective of those individual names, and they went after some of the big ones yesterday, and in a big way. So if they're going to continue to fade those, TAN's going to go down. So we have to be ready for that. KWeb, not much going on. We're waiting for earnings from Baba and JD and those guys. GRWG had a good day yesterday. A little disappointing into the close, but we had made another push up to 20 before giving giving back about half of the day's candle. If we can clear that sticking point, I think we've got, a good opportunity to get some follow through. But even with that, we were up 6%, so that ain't all a bad thing. Carvana was an idea from yesterday. Now we're in this $30 gap, looking for that to fill to 170. So maybe some of you took that trade yesterday, and if you did, you're looking good. There's also another name that was on my list from yesterday, that LGND Ligand was down about 9%. We had a setup on that. I'm going to work on a follow-up, trades about to happen piece with, focusing on some setups that are happening in the high momentum space. This is W, this is Wayfair. I mean, it's rolling over. Lost the 50-day, was down 8% yesterday, on nothing. That's an unwind trade. And within a lot of these momentum charts, Peloton, Zoom, all of them. I haven't looked at them all in close detail. That's number one on my list, but some big red candles and some trend line violations. So those may warrant our attention. And certainly if you're long those big names and you've got a lot of embedded gains, take a look at when you want to take that off and book some of those profits, or certainly be rolling higher to protect your gains. Okay, that's all I've got for this morning. I hope you have a good day of trading today. Little recap. Stay in touch with your trading psychology. Take good journaling notes. You'll see things starting to emerge. Respect that tilt moment and to just push away. Be aware of it if it happens to you for any reason whatsoever. As far as the indexes go, volatile chop range with a downward bias and critical support, key support really close at 341.50 for SPY, at 280 for the Qs. Bearish outcomes happen if those levels break, so we got to be aware of that. FANG, earnings on deck. Most of them look weak. Facebook got a pop, but now can it hold on to those gains? So let's watch FANGs, how they trade into earnings. And if they're weak, remember how Netflix traded. It was weak heading into the print, and then that weakness was confirmed on the disappointment. So people usually know. The people in the know usually do know. So let's watch for strength or weakness in the FANG names heading into their earnings. Okay, that's it. Let's wrap it up. If you're new to the channel, that's great. I really appreciate your time. Please subscribe and hit the alarm bell, and then you'll get all my, notified of all my content. Also in the show notes are links to the blog site and how to register for all my content to get everything, neat and tidy in your email box every time I send something out, and that makes it really convenient for you. You won't miss a thing. I'll be glad to have you. We've had several new subscribers come into the trading room, which has been awesome, and we invite you to do the same. A lot of good traders in there, a lot of camaraderie and teamwork, and it's a real nice community that's starting to form, and I couldn't be more pleased to see it. Anyways, have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.